Welcome everyone to the Capital Compounder Show. This is episode 6. Today we have a special episode. We have on today the founder and CEO of iFabric, Hylton Karon. Hylton, thanks for joining us.
Thanks for having me, Rowan.
So, is this true? So, iFabric, its beginnings way back. You started off as an intimate lingerie company, and then scaled the company now to full-scale apparel company. Walk us through the early beginnings.
Yes, thank you. That does take us back to the early 1990s when we were essentially a shoulder pad. That was the fashion that was in vogue at the time, and specialty lingerie and bra accessories, which is really what that private company was at the time. We started off jobbing our products, and then we got into manufacturing our own products. And when we found out that our shoulder pad machines were the same machines that made bra cups, being entrepreneurial and what else can, to fill out the production and to get a higher revenue, we really started private labeling, supplying bra manufacturers. And then, of course, the next step was, well, why manufacture for others and make a few pennies a pair of bra cups where we could produce our own line? We came up, we saw a uniqueness in the marketplace at that point in time. Fashion was going towards these strapless and backless ladies' fashions, but ladies still needed shape. And so we developed these adhesive bras, and in a lot of cases we patented our own particular designs. And patenting, Robin, just you'll hear it throughout this dialogue, is a very interesting tool that we use throughout our companies. So we are pretty au fait with IR and doing patents where we believe we've developed something groundbreaking, and use it as a tool in our commercial space. It is not something that we use on every one of our products. In some cases, we do use just trade secrets, because we really, when you do patent something, you're basically giving public chapter and verse on how it's made. So it is a strategy of ours. It's really worked for us very well through the years with our retail partners. And it's something that we will always use as one of a number of tools in our businesses as we go forward. So what we did is, from the lingerie business, I'm third generation in the textile business. And so with that, once again, that entrepreneurial spirit of what else can we do, and the exposure to more and more retailers, around 2007, we became aware of technologies that started getting infused into fabric. So you're not only making apparel, whatever the garment is, but you were now going to put a characteristic into the textile. To give you just a few examples, there's something called the DWR, durable water repellent. It's now become a very popular technology today, where you buy a pair of shoes, you can get the spray, and you can literally put your shoe in water and it's going to come out bone dry. Well, we can make clothing that does the same. It's the same chemical, it's the same additive. So that is a unique product. But I think that what got us into, and where the company has enjoyed the kind of a success that we have and the kind of numbers and growth that we're enjoying today, is we laid a foundation of certain technologies and certain markets. So one of the markets that was most appealing to our group in the early days was going after the medical space. Because we believe, from a revenue perspective and from a long-term perspective, that it wasn't just about fashion. It was, what can we actually do and bring something proprietary and meaningful to the apparel industry and to the medical market. And we were exposed to textile applications, technologies that were antibacterial and antiviral, anti-mold, anti-mildew, and this is in 2007, 2008. And I have to say, we were probably the biggest skeptics at the time because these things sounded too good to be true. So we spent multiple seven figures per year doing the science, making sure that if we're going to go commercial with this area of business, that we had something that was credible, because we're not going to waste our time going, chasing something that had no validity long term. And when we did year after year of laboratory testing of our antimicrobial and antiviral, I was in meetings in Europe where they started talking about superbugs and MRSA and different pathogens, and I have no medical background. I didn't have a clue what they were talking about. Suffice to say, today I have a crew and a team of technologists and specialists and epidemiologists on staff. We've become game changers in this space over the last decade.
And those early investments, Hylton, in the medical space and technology and infusing those into your apparel set you up for success during the pandemic, right? So to talk about that.
So what happened is around 2011, 2012, I don't know if you remember the movie Contagion, which was about this. And
scary movie.
I had many a dentist and doctor friend who said, well, these kind of infections only happen in Hollywood. They're not going to happen in real life. Well, that leads me into your question of, well, what happened in the pandemic? Well, I think within a day of hearing or learning the word COVID, the first people to call me were those same dentists and doctors to say, okay, do you have scrubs and lab coats? And what do you have for us? Because, the panic set in quickly. So what COVID unfortunately did was we couldn't have had a better advertisement and a game changer for us as a business to now no longer be pushing uphill in terms of talking to the infection community and the hospital and hospitality community in terms of you need products that can lower what we call break the chain of infection.
Absolutely. If I were to look at your income statement, Hylton, it was absolutely a catalyst, the pandemic. It's not as if that revenue dried up afterwards. Like you doubled your revenue since 2020 and more than doubled. You're basically going for a triple. So you built on that momentum, right, since the pandemic.
And so it's exactly right. Where we were this lingerie company doing $10 million a year, and that business has really maintained itself at a $7 to $8 million level. It'll never have this 100 million, 200. It doesn't have that, and that's not the reason why we went public. So why we went public was because of our suite of technologies that while we dealt with EPA, while we dealt with the clinical trials, while we were dealing with all the science to develop the technologies, we started looking for what we call the low-hanging fruit. So we went after major brands, sporting brands and retail brands who could appreciate our technology of what it did even at the sporting goods level, whether it was anti-odor and antibacterial and things of that nature. So that's what really gave us the growth. And Robin, where we went from 5 years ago being a $10 million business, I publicly this year came out, we're in our fourth quarter, we're going to finish off the year. I did a projection at the beginning of this year to be between 28 and 32 million. And we've tripled the business in 5 years. And I can tell you very comfortably, it's not going to take us another 5 years to get to 60 and 75 and north of that number. The hockey stick, the trajectory has certainly increased in terms of the dollar volume and the opportunities that this business has today. And so we'll bring out early in January 25, I will bring out a ballpark. We'll wait for the auditor to be the final number, but I will give a revenue estimate of what we did in 24. 23, just so that you know, we finished at 23.5, and we then gave the estimate for 28 to 32, which shows that 20-30% area of growth that we enjoyed in 24. And the primary growth, I'm pleased to say, is while the core of our revenue it traditionally was the Canadian market, 2024 saw our first foray into the United States.
And so, what is that runway from here if we look for the next 10 years in the
Wow.
US?
10 years, I'm thinking 5 at this point. There's no doubt that 25 and 26 should really, by 26, we should really see the US overtake in revenue in terms of how this business is growing, and to get to that 50, 60 and whatever number we reach probably in the next 2 to 3 years. And when you're talking 5 to 10 years, we should be well north of 100 million in by that trajectory of what we've built and what we're building.
And Hylton, tell me about the primary product categories you'll be selling into the U.S. market.
So what we've done is we sell in two facets. We either sell our technology to brands that are really mature. They've got their own design, they've got their own manufacturing. They really don't need us for that, although we do have all those facilities. So that kind of revenue is purely a chemical sale for us. But it is not that incremental high dollar sale that's going to take us to our vision of 100 million and beyond in the future. So where we've been successful is sitting down with either a brand or a retailer or a license. That licensing has been really strong for us as well, where we design the product, we incorporate at least one, sometimes multiple technologies in the product, and sell the finished package. So we design it, we manufacture it, we import it, and do full distribution ourselves of the finished product to the retailer. It's quite a wide variety of products that we supply. We try to keep it focused on the more non-fashion. It's not high fashion. So we've really tried to stay with what we call core. So it is underwear, and it's not it's men's underwear, it's thermals, it's base layer, t-shirts. We really it's everyday product because we really want to go for that breadth of 12 months of the year. However, in certain categories, we've been real successful in swimwear. So the swimwear, of course, it is seasonal, but it's building itself into a very nice segment of our revenue as we grow this business. In Canada right now, we do that under the license of Roots. So we are the exclusive swimwear manufacturer with the Roots brand, which is sold into Costco in Canada. We are busy working on a more pertinent US brand because Roots doesn't ring a bell to the US consumer. So we are in talks right now with other brands to take that same design and manufacturing philosophy into the US with a more US focused and known brand in the United States to open up that revenue. And that's when I said 25 and 26. I think from an investor listening to this presentation, Robin, it's important for people to understand when we as a company give financial forecasts. One of the benefits of the kind of business that we run is when you do product development, then you have to put it through various phases. Then it gets adopted for manufacturing and it goes through all the manufacturing cycles. And then it has to be brought from overseas to our shores. Then it goes through distribution by the time it reaches. What I'm saying in this sense is we have the luxury of 6 to 8 months out what our revenue is going to be. So when we bring out an annual forecast, that is not based, we're not a retailer opening doors every day hoping what is our turnover going to be. We have to, for Q1 and Q2 of 25, if those goods have already not been placed in production and have it on the water almost, and also with Chinese New Year, you're not going to be shipping the goods. So when we bring out a forecast, we are pretty damn close in terms of what our revenue is going to be, because we do have optics that far out. It helps us with cash flow, it helps us with suppliers. It really does give us that longer outlook in terms of what our business is going to be. 6 months out is very comfortable for us to always come up with at that point in time, we've pretty much locked it in. We're already working on programs that are starting at the end of 25 and that will go into 26.
That's just great. So if I were to walk into my local Walmart, am I going to find clothes produced by iFabric?
Absolutely. So our biggest technology, which is really a medical grade technology, but right now, as I say, we've used it in the lower level apparel brands, is a technology, and it's a group of products called Protex 2. And there's a multitude of products in Walmart, in the USA and Canada for many years, and you will see our logo and our technology on it. We do have a customer in the United States. If you walked into any one of 4,500 Walmart stores in the United States and you walked to their scrub section, you would actually see on the banner our Protex 2 logo, because that's how important our technology is to that manufacturer for that segment, which is the apparel for the medical market. So, it really is putting our name on the map in a very wide distribution channel in the United States already. And as years go by, that brand will get a higher and higher exposure and commercial acceptance and exposure.
And iFabric owns the patent to that particular technology.
So in that particular, it's a group of chemicals, and I don't want to get too much into science, but we own the IP, but we haven't patented it. And this is where our expertise, I just very quickly want to clarify. Textiles, and the word textiles, fabric, is too encompassing, because when you're dyeing man-made fibers and when you're making natural fibers, they don't process the same way when you're dyeing them, and that's how we get our technologies into the fabric. So it's basically chemistry. So what we call is a recipe. So literally every fabric has to have its own recipe. So it's not an easy business, and we don't want it to be an easy business for that very reason. We are very comfortable in needing a specialty, and that's what we are. So every one of our customers, when they use our chemical, have to get a recipe from us and from our staff before they can do the manufacturing.
There's a high barrier to entry because of all the intricacies, and companies like the big chemical companies like Dow, etc. They're not going to be getting into the clothing business like this anytime soon.
It's not, they want to sell chemicals, and they've built their billion-dollar empires, and they do what they do well. But I think it speaks to, when I go on investor calls, people always ask me, who's your competition? And to find another apparel company that's developing its own technologies, I just don't know of another one. I do know that they do use footballs in the marketplace, and that's a case where it's actually become an interesting sales opportunity for us, because these dye houses see the results of our chemistries versus what else is in the marketplace, and often they don't want to buy the same product from 3 or 4 different suppliers. So they've become one of our sales avenues to say, well, can we buy more of it and use it with more of our customers? So it's an additional sale for us. So it's become very interesting, as I say, since COVID. The interest in what we've believed in from the early 2000s. We put our money where our mouth is to develop these things. We're actually working on next generation products, so we're not standing still. There are future developments that you'll hear of as the years go by. We certainly will never stand still in this space.
And speaking about competitors, if we look at Gildan Activewear, another Canadian company, are you increasingly entrenching in their market?
No,
basically?
I mean they do what they do well. They've got their T-shirt and they've got their core business, and they've built up a pretty impressive Canadian company. I mean they've built up a very impressive business. What they do is not a direct competitor to what we want to do. Really, as I said, the medical space is our holy grail. That's our long-term focus, and that's where we're going to get our uplift sale, and we're going to have a global opportunity. These problems are global in nature. So while we're really using our local markets to get us to that 50, 70, 80 million and beyond, we've literally had global opportunity. South America hasn't been touched, Europe hasn't been touched, Asia hasn't been touched in terms of what we're developing. So we really do see a time whether we have to partner in certain continents with people who've already built a market, as opposed to really trying to develop a market from scratch. It's just a quicker entree into a market with next generation product.
And so we've talked about Walmart, Costco, Roots are all retail partners of yours. What other retail partners can you name?
We do business. I mean, the product's on the shelf, so it's public. We do business with Target in the United States. We've had probably a 15+ year relationship with Kohl's, 1,200 stores in the US. We've got a number of really big store opportunities. I think one thing to keep in mind when we get onboarded with these really high volume retailers is you've got to prove yourself, the product has to prove yourself, and they really want to know that product resonates with their consumer and their customer. So when you might start off with a program with 500 stores, and then the next year it's 1,200, the next year it's 18 or 2,000. Well, they got 4,500 stores. So when I say to you, we can grow and double this business, that's with organic growth. That's how. That's without having to do M&As. That's without having to go and buy revenue for us to grow our public company. We believe that we can get to that $100 million mark and beyond with our core business and focus of who we are and what we are. The other area that you'll see in 25 and beyond is because our technologies have proven themselves now to the retailer. They've said to us, well, and it's resonating with their consumer, what else can you put it into? So I'm not going to tell you what it is today, but we're actually working on manufacturing products that use fabric that are non-apparel. So we're actually going to no longer just focus. So while that business will continue to grow, and it's got many, many decades of growth opportunity, we are now starting to build opportunities outside of apparel. So it's using the same technology with the same efficacy, but in things that will be outside of apparel. So I think it's exciting times for the company because we're now going to be forced to grow in areas because of demand. So, we're credible, we're reliable. I think, Robin, what investors looking at our company have to also keep in mind is we could probably grow this business at a faster pace, but growing too quickly, companies overexceed their leverage. They too leveraged, they don't have the right kind of capital behind them, and if we're growing at 20, 30, 40% a year, it's enough. It's impressive. We need to hold our breath. We need to make the money, reinvest it in the company, and we can turn that money a few times a year. It's easy to add another 10, 20 million, but do it responsibly. We're not going to just dance at every dance because the opportunity is there. The opportunities are going to be there for many, many years to come. And so management are very, very focused on making sure that what we're growing in is an area that is in keeping with what we've done in the past, so that we're not just this do-it-all company, that our customers don't really, when they think of iFabric Corp, what are they? It's still going to be in keeping with what we are as a company, and it's important that we keep our focus and that we don't lose our focus.
Absolutely. So just going back to some of those retailers, winning a big contract with Costco or Walmart is no easy task. Hylton, if you go back over the past 20 plus years, what was the proudest moment for you? Like what big retailer was it?
Our first big retailer that we really, I would say that was the cornerstone, was a Canadian company that was also big in the UK, and that was Licenza. And we really, we came out with this one very unique adhesive bra, and we patented it, and they jumped all over it. And we actually manufactured it in Markham, Ontario.
Okay.
So we had, as I said, we had the shoulder pad, so we knew how to make bra cups, and we did the cut and sew, and I had a full sewing operation. Unfortunately, when the volume starts to get that big, what would cost us, I'm just using these as an illustration, it's not based on accuracy or anything, but what would cost you $5 in Canada, you could get made for a buck overseas. It was that kind of ratio. So when the numbers made no sense, we would love to have kept manufacturing in North America. Unfortunately, the textile and the apparel industry, it's all very well, the new regime in the US taking over in January wants to bring jobs back to North America. Apparel is a skill. Manufacturing apparel is a skill. It's not just you can't just automate machinery. When you see an automated line making cars, it's all robots making the car. Well, if you've ever seen an apparel cut and sew, that's what it is. It's hundreds of people, line after line of people with a skill sitting at a sewing machine. That skill has left North America. To bring it back, not impossible, but it would take 5 years to even get going, to start building the skill over again. It's not going to happen. You're not going to pay where your labor overseas, unfortunately, is $1 or $2 an hour or a day, and you're going to pay $18 an hour in North America. The economics don't make any sense. So while it would be lovely to say we want to bring that manufacturing back to North America, I just don't see it happening.
So landing that Licenza deal was pivotal for you and the
Absolutely.
company. How did you get that first meeting?
At that point in time, I was. It was a private company in those days, and it's the story of life. If you've got something unique and you've got something that's pertinent, people will give you a chance to try it. And we have always found with and I think innovation is really at the core of what we are as a business, and that's why we've expanded past just this little lingerie company into this quite a sizable and growing quite nicely business that has got so many opportunities, and we already have really grown quite nicely in terms of the product segments that we now supply today. We always have that opportunity to try something with a retailer. They will try it in a small way. If it's proven big, they will take it to another level. We are now taking technologies and the trial orders where it would be $10,000 or $20,000. A trial order today could be $1 million. So, where, it's just the economy of scale. The one good thing that we do have based on our current volumes is the people that we're using as our suppliers have the volume, available to them. We really are a small customer to them in terms of the volumes that they produce on an annual or on a daily basis. So for us to grow 5 and 10 times is not going to be outside of the scope of the kind of suppliers that we're working with today. So we're just getting going is the way we feel we are internally in our business.
Absolutely. So we've talked about the antiviral, antimicrobial apparel technology. What about smart apparel? I'm really interested to learn more about that.
It's not an area. Obviously, I'm exposed to it and I've heard a lot about it. These are more, whether it's a heart monitor, these are basically electrodes that are embedded into textiles, and whether you're running and jogging and it's counting it's monitoring your heart rate and other vital signs as as you're jogging and working out. I think that that technology will only become more and more and more sophisticated. An iWatch, what it can only do these days is is wearable technology that it's not going to surprise me in years to come what these things are going to do. Probably where they've come from even in the last 5 years. So it's not really. We've got such growth opportunity in what we do that is not an area that is our expertise. We really understand fabric, and we understand putting uniqueness into fabric. And basically, just to give you a bit of a mindset, if you're in a hospital and you're talking to an infection control officer, they have what are called protocols that the nurses, the medical practitioner should follow in a hospital. They should wash their hands between every patient. But when a nurse has got a patient in the next bed who's sick, who's falling out of a bed, needing immediate care, she hasn't, well, excuse me, sir, I have to go wash. They don't do it. So they're literally doing their best. They're running from bed to bed, from ward to ward. Unfortunately, the infection goes with not only the patient, but with the practitioner. In certain areas, they don't want doctors to wear the tie anymore because, yes, body fluids can. So it's a mindset. So what you have is you've got protocols that should be followed in hospitals. And a study was done that proved many years ago that 87% of hospital protocols are not followed. It's just it's all very well to come out with guidelines. It's just practical. So what we do is our mindset is, how about a protocol-free product? By purely wearing that gown, that scrub, the lab coat that's got all this efficacy and ability to not only protect a patient, but also to protect the practitioner. So that when they go home, they're not taking all these infections home with them. So there really is nothing active that has to be done by the wearer. All they got to do is wear it. So it's really, then we can put it in bedding. Then we can put it in separation, these curtains between the beds in hospitals. We're actually working on technology in the future that we'll be able to put into hard surfaces. So your door handle, your bed rail, the plastic that makes up the bed of that hospital bed can have infused or coated coatings that have got our technologies to help break the chain of infection. So when I say that we've got years of dynamic growth, it's because we're going to take what we've learned and what we've learned to do well into areas outside of just apparel and basically apply them to surfaces.
That's super interesting. The reason why I asked that question, Hilton, is basically you're banking the future of the company on that medical technology, basically apparel, and then
A
outside of
lot.
apparel.
It's so dynamic, the
Yeah.
opportunities that is bringing to us. That yes, the answer is yes. That is a group of technologies that will take us into the future. And as I say, we're busy working on next generation product as we speak. What works in apparel might not work as a bed rail. So a lot of work and a lot of science and a lot of trial and error and cost.
Research and
So we
development, right?
really,
You're investing that R&D
yeah,
every year. Yeah.
yeah,
So to most investors though, Hilton, they might run a screen. They'll have iFabric pop up. Obviously, you're a profitable and growing company, but then they might stop and say, hold on, it's an apparel, it's a textile company. The margins are low. Why do I want to be in textiles? What would you say to that potential investor?
Well, I would say that, even if you watch this year, when we bring out our 2024 results compared to 2023, and you're going to see the kind of profits that we're making compared to what we've done. We've done a lot of heavy lifting in the past. We've done a lot of whatever money we made, we did put back into R&D and will continue, but it will be at a lower rate because of the revenue going up. So where you're maybe in your teens, you're breaking even. Now you're adding another 10 million of revenue that doesn't need to cover overhead. All of a sudden that goes to the bottom line. Now you take 30 million, you go to 40 million. Now half your revenue is going straight, your profit's going to the bottom line. Your GP is going up. We are always a kind of company that will look at whatever programs are our lowest producing. We're not just going to run turnover for the sake of turnover. So where we can replace a program with better revenue and a better quality bottom line, we will take that money and chase a better revenue stream. So we are monitoring this business on a number of levels, and we are margin sensitive, and we will continue from an investor point of view, show a GP of north of 40, and an EBITDA in the future that could be north of 10. So I think that we could be a real quality investment for years to come, with a very respectable revenue stream, and who knows whether it's a year, 2 or 3 from now, with a nice dividend, as this business is now producing cash at a point where we don't need it anymore, One thing to keep in mind, Robin, right now as we sit today, this company is operating on its own cash. While we have lines of credit at the bank, and we've applied for higher lines because this business is growing at that level, we're always turning it back into cash at some point in the year. So this is going to be a pretty impressive bottom line. We've done the heavy lifting, and I would say that our overhead is going to disproportionately grow to our revenue stream.
That's exciting. And one thing I love to see, Hilton, is a CEO, the management team, the founders having skin in the game. And you absolutely have skin in the game. Your stake in iFabric, the company which you founded and run right now, is it 65%? Of the shares of the company?
Yeah, I think I've sold 3 or 4% of my holdings since we've been public in 10, 12 years, because I believe in the company and I believe where we're going, and we're going to build a very impressive value for shareholders in the future. I don't mind loosening up, as we go, but I believe that we've done, the heavy lifting's been done, and we're finally now are on a path to a whole different level of revenue and appreciation. I don't think that the stock, Robin, if you take our cash, our deposits, our receivables, and our inventory, and you take that dollar amount, and you take our share value right now, our capital, our market cap is pretty much what our assets are. So somebody buying this stock is buying them at book value. There really is no multiple built into our share value today. So where this company is going in the future, to double, it really is not an excessive play for this thing to all of a sudden pop, and it's going to be that 20-year overnight success where all of a sudden you and I, before the show started, spoke about another stock that we're both familiar with, that all of a sudden has multiplied very impressively. And I believe that we're going to be doing the same thing. I think that we're going to show in 24, we're going to show in 25 this pretty significant growth and bottom line. And I think that is going to start showing the investor community this is something to have a stake in, with very impressive upside potential.
And so we know that Trump is taking office. He's back in the White House January 20th, 2025. Does that scare you, Hylton? Like he has threatened 25% tariffs, and it's just to get to the negotiation table,
well,
basically.
We don't manufacture in Canada, so it's not Canadian sourced goods that concerns us, but we are certainly very heavily Asian and primarily Chinese sourced. And that is, they're talking about higher than 25%, but who know, the fact of the matter is, we are already talking with our suppliers and other countries. So there's Vietnam, there's Cambodia, there's a number of other avenues that these factories have already started putting facilities in other countries to jump ahead of this curve. And I don't think even Trump, I think the sensitivity to China started many years ago. I think COVID really started that poor taste, let's say, in the consumer's mind of everything being sourced out of China, and the West being so exposed to sourcing out of China. So that's already started. I think Trump's just going to exacerbate that point, and we're on top of it. So we really, I would say that for the most part, we do have alternate options already in place. And the other part of that is our competitors are all in the same boat. So it's not just our company, the whole North American supply chain is in that boat. So flicking a switch and just saying, oh, tomorrow you can walk into another factory somewhere else and get the same, it's just not going to happen. It's impractical, and the reality of the situation is it's not that easy. So it's going to take time, and I think that right now there's a lot of posturing going on, and I think when the dust settles, there might be a new reality, and we'll have to deal with it, and we will. But it's a global issue. It's really not endemic to our company.
So it's currently not a material risk to iFabric, and as you said, it'll affect all competitors.
Yeah, I also find it hard where he says he wants to lower the costs to the consumer, and you put tariffs on things. You can't
pass down
low
to the
at the
consumer,
same
right?
time. I just don't know how. I don't know how you pay more and retail not go up instead of come down. So I really, it's going to be an interesting to see where he does land up putting higher tariffs.
Yeah, and I really want to get into your leadership principles, Hylton, because building a business, for 20 years, you're going to be reaching the 100 million revenue run rate mark in the future. How did you do it? What are your leadership principles basically to build a successful business?
I think the key thing that has always served our companies well is trying to find businesses with the least amount of competitors. I am not going to ever be in a business that is a commodity. When you say Gildan and you talk about companies that make T-shirts, you can sell 1 million T-shirts today. Somebody comes in a penny less, you're not going to sell T-shirts tomorrow. It's a commodity game. None of the things that we sell are commodity. Our lingerie business has got 2 competitors. Our IFTNA business is so unique, and the reception we're getting is so unique because of what we're able to offer, not only appropriate aesthetics, but also with these technologies. So that's really our management objective, is to look for businesses that do have uniqueness and don't have, we're just not going to ever be in the commodity business. So I think that's our saving grace, and that's what keeps us. It's a lot of pressure to always have to be innovating, but that's what we enjoy doing. We've got a lot of young, talented people, and that's what you've got to continue to do, is just, find good people that enjoy doing what we do.
That's just great. And if we look at the stock chart then from 2020 till now, there is obviously a disconnect between the stock's performance and
Right.
The underlying performance of the business itself, right? The revenue growth, EBITDA, and of course the projections. So you've touched on this before, but iFabric is still misunderstood. And so what more would you like to tell potential investors or people who's interested in the business that they might not know, right? That's still a misunderstanding.
I've been trying, and I don't know that I've been too successful. But we have to just continue to put the message out of who we are and what we are and our uniqueness, and now to show in 24 and 25 and beyond the kind of bottom line revenue, positive cash that we can make as a business. And I think it's going to be dynamic and it's going to be impressive. And I think that when we start showing the kind of revenue opportunities we have and what we can build for shareholders, it's going to start to be telling a very, very different story within the next few months, never mind the next few years. We really are going to transform. We've done a lot of heavy lifting. I think COVID probably just took a year or 18 months out of our story, but we're back on track. Those days are behind us. And I think the fact that all that COVID has done is proven that PPE and textiles for the medical industry, it's in North America alone, it's nearly $1 billion a year market. And we're just starting to put our toe into that market, in and amongst other opportunities, be it transportation, be it the hospitality, not only the hospital. There are military applications that we haven't even touched on. We are really that dynamic and that unique in terms of what we have for many, many years to come.
It's a big total addressable market, and because you're doubling down, tripling, quadrupling on the medical space, it's recession proof, right? There's always a need
Absolutely.
For all those products. This has been a really great conversation. Is there anything that we left off the table, Hylton, that you wanted to say?
No, I think we've kind of covered the broad strokes of who we are as management, what we really are focused on, and what our financial objectives are. And I'm just going to leave it on this note. It's actually nice to be part of a company that actually has a good social impact as well on society. We're trying to do good at the same time as be a good commercial opportunity. We've got a great social message in what we're doing. So that's just who we are as management, and it's nice to be in this business. So it's doing good and being very commercially acceptable as well.
I love that mission. I'll obviously be following the company from here on out. And thanks again for the conversation, Hylton.
Thank
Have a great
you very
day.
much for the opportunity.